thing that you want to turn on, and you can do your tax form in here. This doesn't really make a whole lot of difference as far as QuickBooks, but you can if you want to. And then one of the things I definitely always turn on is account numbers. And this just will allow us, when we import the chart of accounts, to see our numbers that we have that correspond to what your account manager may be referencing throughout the year. Most of this should be just left as default. So the only things that you change are these three things that I showed you. I don't know if anyone's using multi-currency, if I really want to go into that. That's more of an advanced topic that I don't think we're going to cover today. And so if you need help with multi-currency, or you're in a multi-currency situation, just maybe reach out to me directly and I can give you some assistance along those lines. Here's where you can set up your sales. I'm not going to go through a lot of these settings right here on expenses and sales. Most of these should be left at default for right now. And so I'm just going to go to done. And the next thing that you want to turn on is the tax center in QuickBooks. So by default, QuickBooks Online does not come with the tax center turned on. I'm not, it's basically because there is a setup required for your taxes based on the province that you're located. And so QuickBooks can't have that set turned on as a default. So you need to go to it and turn it on. So I'm going to go to taxes.
And while you're doing that, Jennifer, I'm just going to take a brief second to chat about the HST, GSTHST quick method versus the GSTHST long method, which is actually quite critical when you're setting up your tax accounts. If you are using the quick method of GSTHST, which most of our clients are, and in fact is beneficial for most service-based businesses, you want to be careful on how you set up your accounts, because yes, you need to break out the GSTHST on your invoices as well as any fixed assets, but most of your expenses, you should not, let me repeat that, you should not be separating the GSTHST from the individual expenses, because that'll create a handful of work for you to do to correct that later on down the line if you don't get this set up correctly from day one. So it's critical that you know whether you're on the long method or the quick method, and that you set up your chart of accounts from day one appropriately, which means we'll give you the chart of accounts, but you'll need to decide whether you have, whether you're breaking out GSTHST on the individual categories. And if you're on the quick method, all your expense line items should not be. It's only the revenue and your fixed assets, which are things like computer supplies, computer equipment. So, sorry, not computer supplies, I should say, computer equipment and computer software. So those are large purchases, typically over $200 is the threshold we use. And we have a special account for that, computer hardware, which you can tell by using the account codes, which Jennifer pointed out earlier. You can tell which is a computer hardware or computer fixed asset versus a computer supplies, which is an expense, because of the account numbers we use. All expenses are going to be under the 700 category, and assets are going to be under the 200 category. So just a quick tip there. Sorry to interrupt, Jennifer.
No, that's great. And I'm going to touch on that a little bit when we import the chart of accounts, just because it is so important. And it's one of the areas that we see so many of our clients mess up on, is getting the HST wrong. And so it's just a very, very important topic, and important to just check in. If you're not sure, just check in with your account manager. Just send a quick email. Hey, do you know if I'm quick method or long method? I need to know how to track my HST. It's a very quick question for us to answer for you. So the next thing, so we got the tax center set up. So now I'm going to go over here to accounting the chart of accounts. By default, QuickBooks comes with, I think, like what, 5 account, like, I don't know how many, a couple accounts, right? So it's definitely not enough accounts to start doing any bookkeeping with. And we have this actually in our free resources on our document library. You can access it anytime. We have our chart of accounts in a format that's ready to import into QuickBooks. So if you've already been using QuickBooks, you can go grab it over here. I'll show you where it's at. So it's right here, and you would just download it, and then you can import it just like I'm going to in a moment. So over here in QuickBooks, it's not really easy to tell exactly like where do I import my chart of accounts. In QuickBooks, on all of the menus, you're probably going to notice this drop-down arrow, and this is just something to keep in mind. Like if you're looking for a button and you're like, where is it? Check for these little drop-down arrows because it gives a secondary menu more often than not. So I'm going to import it. I'm going to browse. In this case, I already have it saved on my computer. So this is already mapped. You don't have to worry about mapping any data. You just breeze right through this. Import. It will just take one moment here. So that's fine, you just ignore it. It's just saying these accounts already exist in the QuickBooks account, so we couldn't import it, but don't worry about that error. To get out of this screen, again, it's not immediately clear. You need to press this little X right here and say, yes, it doesn't, it still saved what we imported. It's a little bit slightly misleading there. Okay, and so this is our standard chart of accounts. This corresponds to all of the materials that we provide you guys. And the reason that you want to use this is it just makes it very easy at tax time because everybody's on the same page using the same income and the same expense accounts. And it's easy to be able to discuss those accounts with your account manager. And going back to the tax rate, one of the things that I like to do based on whether you're quick method or long method is go ahead and set those default tax rates. And we can actually do that by bulk. And so in this instance, I'm going to assume that you're quick method. And so what I'm just going to check all of these accounts right here, set default tax code. And what I'm going to do is set all of them to out of scope. And then the few accounts that we do track HST on, I will come back and fix those and one by one, but there's only a handful of those. So it's really easy, but the majority of them are going to be out of scope. And this, what this does is every time you enter a transaction to that category, so say you go to accounting fees, the tax is already going to come up with the correct tax code, and you're not going to have to remember, hey, do I track tax on that or do I not? It's already right there. And of course, whenever we're doing these webinars, QuickBooks takes like a little bit longer to import stuff. So the few accounts that Andrew was mentioning that you would still, even in Quick Method, you would still track your HST on are these 200 accounts of fixed assets for your company. And these would be any items over $400. So computer hardware, office equipment, office of furniture that's over $400. And the other one that you would be your contract revenue right here, 600. So as he was mentioning, there's like definitely a system to our chart of accounts. 200 is all your assets, 300 is your liabilities. You get to 600, that's your revenue, 700 is expenses. So I'm going to go ahead and fix these ones to be the default tax code, HST Ontario. Okay, so your set of chart of accounts is set up, and I want to go ahead and touch briefly on the director's advance account because you'll probably see right here and you may be wondering, why is this set up as a bank account? It's my director's advances. We do that for a very specific reason, and that's that your director's advance account can be viewed as like a bank account because it's a record of any contributions that you've either made to your company or any money that you've withdrawn from your company. And there's some limitations in QuickBooks if you don't have it set up as a bank account and just as a regular asset account. And so a bank account is essentially an asset. So it doesn't really matter like for your books. It's just for QuickBooks to be able to use some features that we have it set up as a bank account. And then what you're going to want to do is create a couple of new accounts for whatever corporate checking or credit card accounts that you have. So for this instance, I'm going to say I have a checking account. You can name it whatever you want. A lot of my clients name it their, TD, RBC, business checking, business savings. And those numbers usually start at 100. And then you can set up a credit card. So there's two different, there's the bank account type and then the credit card account type. And this, I'm going to go ahead and do this as 305 because it's a liability. Okay. And then what you would do is the heart of QuickBooks Online lies right here in the banking tab. This is where you're going to enter a lot of your transactions. You're going to essentially, even though QuickBooks has a formal reconcile bank feature, this is essentially like reconciling your bank, because you're going to go through and enter all of these transactions that come through your bank feed. So you would come over here to banking and you would connect your accounts right here. And once you connect your accounts, the screen changes a little bit. And I'm actually going to switch over to a different demo account that I have already. A bank account. It's not a live feed of a bank account because it's a demo account, but it's where I've imported some transactions, so we can go through that a little bit. So once you would do that, the setup would be complete and your QuickBooks account would be ready to use.
And again, one thing I want to mention here is that the bank feeds in QBO are a lifesaver. They save a huge amount of data entry because the transactions flow in automatically from your bank. However, they are not perfect. One of the big problems we have with the banks in Canada is they consider the data to be their data, not your data. And as a result, they make it difficult for companies like QBO to be able to pull and fetch this information. So periodically the bank feeds can break and you'll have to go back in and reconnect them. And that's mostly because of the multi-factor authentication way that they do connect with the banks and because there isn't a direct API integration. So it is critical to come in every month or two to make sure those bank feeds are connected and reconnect them, because if you wait more than 2 or 3 months, you may very well end up with a gap in your bank statement, which again is why it's critical to go through the bank reconciliation process, which I'm sure Jennifer is going to touch on later.
Yeah, exactly. Yeah, and you may notice the majority of the clients that I see or that I work with, they all bank with major banking institutions in Canada. There's some very small credit unions that you may not be able to connect. And if you're having trouble connecting a bank, you can always reach out to me directly and I can provide you some feedback and instructions on how to manually import those statements as well, but I'm not going to cover that today. Okay, so let me pull up. I have another account signed in here. So this is another account that I have signed up, and it's set up that basically has the banking data, some banking data in there for us to look at. Okay, so once you connected your corporate accounts, your checking account and your credit card here, this is what this banking tab looks like. And once you connect one account, it changes to this. And so when you want to add another account or you get another account, you would click add account, and then it would go back and walk you through here. Let's see here. So this is what this is doing with the bank feed is that it's just pretty much scraping the data from your online banking screens, and it's pulling it in here similar to what you would see if you logged into your online banking. There's this spent column and a received column, description, and what right here are the category match. We'll cover that in just a moment. Do you think we have time to briefly touch about, should we touch about Receipt Bank right now? Or Andrew, do you have any feedback on that?
Yeah, I think maybe this is an opportune moment to touch on it. We're obviously not going to do a deep dive on it, but obviously the number one place that you're going to interact with Receipt Bank is going to be right here on the bank statement. And that's because the beauty of what Receipt Bank does allows you to take a picture of a receipt and or connect to online accounts like Amazon.com and have that information automatically pulled off the online resources and come in as an expense transaction, which would then mean it will potentially show up as a match here on your bank account. So I think we should touch about it briefly here, and then again maybe also on the expenses for looking at the unmatched transactions, because I think that's one thing that often gets overlooked with Receipt Bank, the transactions that aren't matched and what you should be doing with those, on a regular basis. If they weren't paid for by your debit card or credit card, maybe they were paid by cash or paid by a personal credit card, or there's potentially duplicates, or they didn't match because the sometimes we get issues with US currency not matching to the close enough amount to do a bank match. So
Right.
we could touch briefly on that here, and then again when we look at the expenses.
Okay, so I don't know how much time we will end up having to go into Receipt Bank. I think it would just be important to note that if you are using Receipt Bank, prior to doing anything that I now talk about now, you would want to go into Receipt Bank, and on the Receipt Bank side is where you would categorize all of your expenses, and you would publish them to QuickBooks, and then they would show up here as potential matches in your bank feed. And so the workflow would be to go to Receipt Bank first, deal with all your documents, send them to QuickBooks, and then come deal with the bank feed in QuickBooks. If you're not using Receipt Bank, you're going to come straight to the bank feed right here. So I just want to touch on that very, very briefly. And if you need more information, just reach out to us directly, and we're happy to help set you on the right track regarding that. And then also, so if you've used Receipt Bank, we're just going to pretend it's all in there. It's matching. And if you haven't, there's obviously still going to be transactions that are not going to come through on Receipt Bank. You'll see right here, I have some payments to CRA. Those are probably not going to come through your Receipt Bank anyways. So let me see here. My mouse is kind of acting funny. So the way that you deal with these transactions, QuickBooks tries to guess what they think the transaction should be. So if it's in green right here, it's not because this is necessarily the account that the transaction should go to. It's just that QuickBooks is saying, based on past user behavior, we think this transaction goes here. So it's important to note that, because I see a lot of clients who think that they're right. Like, that's where I should put it.
QBOs, we're lucky if they're 50-50, right? I mean, it's not bad, but it's nowhere near 100% accurate. You need to look at those to make sure it's in the right category.
You definitely do. Even I've tested some accounting softwares that are trying to tell us whether it's an 80% match or a 50% match. And those, even when they say like they're 95%, they can still be wrong. So it's just, you need to individually check each transaction yourself and not trust the software in this situation.
Yeah, the software makes our life substantially easier, but there is still a requirement for human intervention and human thought on the bookkeeping and accounting process. I wish there was a software that basically took all the responsibility away, but probably, arguably, the most important role in the bookkeeping process is being able to classify the transactions. The great thing about the technology is it's going to get the numbers right, but the classification is really where these tools struggle.
Yes, exactly.
The more you use it, the better it gets, because it does learn from your behavior. So it will get better over time. When you first start out, it's going to be pretty bad in how accurate it is.
Yeah, and we're going to touch about how you can set up some rules that deal with some of these transactions, and the rules should always be accurate because there are rules that you go in and set up. And some of my clients, they say, well, why isn't QuickBooks smart enough to do this? I don't want to have to set up this rule. Well, there's a lot of different tax strategies different people use. And so QuickBooks, like, they're just not going to be able to do that. And so we're going to go in and set up our manual rules based on the way that we want our bookkeeping done and the way that's most beneficial to your taxes.
Absolutely. And every business is different too. I mean, I was seeing online another accountant asking a question about, he had a client who was in the dog show business and wanted to actually deduct their stud, right? You would never, ever be able to deduct, dog food and, the purchase of a dog for an IT consulting business. But in that business, it was legitimate and it made sense. So you can imagine that there's no way that you can create a rule that will work across every business. The good news is we have a very specific niche. So we're building a process around service-based professionals. We're working with Jennifer to build out some custom bank rules and stuff like that we will probably be rolling out to clients in the coming months. Yeah, let's say over the next year. I don't want to put too much pressure on Jennifer. But they only work because we have a standard chart of accounts and we have a standard client base. A lot of those rules wouldn't necessarily work for a person that was, say, in the kennel business or something like that.
Yeah, exactly. So let me dive right in here to the bank feed and how to categorize. One thing that I want to highlight really quickly, because this is so important, and it's been like a little glitch within QuickBooks in the last 2 months. I've been seeing a lot of, and that's that there's these little gray icons right here, and there's a little gear right here. And what happens, and you'll see it happen right here, is by default, this should be checked, copy bank detail to memo and show bank details. Lately, they've just been arbitrarily being unchecked. So before you work in the bank feed, just make it a part of your workflow to come over here to this little icon, make sure these 2 items are checked, and I'll show you why that's important. First, that show bank details, it gives us a little bit more information about what the transaction actually is. When we don't have this checked, QuickBooks can actually kind of changes the name of what the transaction. When it shows bank details, this is exactly how it should show up on your online banking. It matches it. The other issue is this copy bank detail to memo. If I don't have that checked, this memo field right here is blank when I don't copy the bank detail to memo. And what would happen is that when we go to run reports, there's essentially no detail about that transaction for us on the internal side or for you. So you may go back and look at all your advertising expenses, and it will just say advertising $75, advertising $60. And there's no memo field about exactly what that transaction was. So it's really important that when you're entering these transactions, you make sure that this is filled out. And you can also write additional information in this memo field if you're entering transaction. So I might want to say, okay, this was GSTHST payment first quarter. And that gives me even more information. So you're more than welcome to fill that out. So for this account, this is I'm just pretending this is a GSTHST payment. It's from CRI Canada. The tax code I'm going to put as out of scope because I didn't set that up on this account. And I'm going to go ahead and add it. It's important to note on your GSTHST payments, they go to this GST suspense account, but that's just the way that QuickBooks deals with GSTHST payments. And I'm going to add it.
Yeah, again, one of the reasons we use that suspense account, they won't allow us to put it right to the GST native account because they use that for their tax center. Their tax center, unfortunately, is not equipped to handle the quick method of HST at this point in time. So it is, important that we use this suspense account. On our end, we can handle all that and then take it in and process your HST return for you. But unfortunately, QBO's tax center system only works for the long method of GSTHST. So again, just a little tidbit of information there.
Yeah, so now I'm going to go show you how to start setting up some rules, because especially for these tax payments, you don't want to have to remember how to deal with them every time. So right now I'm just going to go right here. I'm going to click on it. And you can actually, now it's super easy to create rules. So I can click on here, okay, GST suspense, and I can say create rule from this transaction. And so it's going to say, these are where it comes up with the rules, and you're going to fill it out. So on this one, I might just want to say GST payments. You can name it what you want. I'm going to say for money out. I'm going to say it contains, because this is the bank data that it's showing. I'm actually going to delete the amount field. And for most of my rules, I do delete the amount field because the amounts can change, but the bank description usually always stays the same. And I like to add like description, any, and change it to or. So I use description or bank text contains this right here. And you can play around with these rules, right? So, the more rules you set up, the easier your life's going to be in the long run.
Yeah, and do you want to touch on how you can do a split as well? If you have something like an automobile or a home office that is partially deductible?
Yeah, well, I'm going to finish this one and then I'll come back and do one more rule with the split.
Perfect. Sorry to.
No, that's great. No, thank you for reminding me of that though, because that is something that I tend to forget, is that how it's really great to be able to split these. So there's a couple options when you get down here. So you can do auto categorize and auto add. So this would just automatically add it. You never see it unless you're going to look at reports. So if I hit this, so it added one transaction to my books, and the next time that transaction shows up in this bank feed, it's just going to automatically, you don't have to touch the transaction ever again, basically. It's already going to be in there.
Do you want to show them how to go back to them if they're trying to look at the transactions that are already in QBO as well?
Yeah, so say you're like, wait, that transaction went in there. Maybe I applied the wrong rule to it. That wasn't the category I wanted, and now it's gone. Like, where do I find it? So there's actually a couple different places you can find it. And that's with QuickBooks, there's always multiple kind of entry points to your data. One of the ways you can see it is under this review tab right here. And you can look for it by searching it. You can filter right here by dates. The other place you can come look for it is over here in your expense tab. And you can, again, you can filter. So I'm going to just do payee CRA. Apply. So here's all my payments to CRA right here. And then you can also change the category. So say I put it to something else and you're reviewing your expenses. You're like, wait, that wasn't the right category. You can actually just quickly change it and it saves it right there. You can also view or edit the transaction right here if you want to look at it in more detail.
And you can also edit them in bulk as well.
Yep. So you can categorize the selected to a different transaction right here. So let me just clear the filter. So this is a good way to like look through, and over here you might want to put in the memo field so you can see what it was. Because a lot of times the payee field might not be filled out, but you can look at the memo field that you could sort. So you could say, wait, well, you know, these Airbnbs were actually reimbursed expenses, they weren't travel, that kind of thing. And you could quickly reclassify them. You can also look at all of your expenses through the reports, the main reports right here, the profit and loss. You can also look through all of your expenses. You could always drill down in reports. You could drill down and view your expenses that way as well. And with the banking tab too, it's also, what's handy is that you can always also undo a transaction right here if you want to. Let's just undo it. So now that went out of QuickBooks and back into your banking tab. And one thing I would want to touch on just really, really quickly, because I've had a number of clients struggle with the concept that when it's in your bank, when all these transactions are in the bank feed right here, they're in QuickBooks, but they're not essentially in QuickBooks. So the bank feed is where you need to make sure that they get into QuickBooks as far as they're going to show up over here in the expenses. They're going to show up on your reports. When they're just sitting here in the bank feed, they're here on the screen, but they're not in your transactions.
One other thing I might also touch base on as far as just good etiquette when it comes to bookkeeping. Don't load in 20 different credit cards and bank accounts. It'll make your bookkeeping a mess and difficult to clean up. Good habits are to have, you know, one business corporate credit card, one business corporate bank account, and keep it as clean and organized as possible. We do understand that there are going to be personal expenses that come on a corporate credit card, and then there's going to be some corporate expenses that come on personal credit cards. I do not encourage you to load up every single credit card that you have because that's going to be reconciliation and the amount of work that you have to do substantially greater. One of the other things to note is that QuickBooks, as soon as you add a bank account or a credit card, it is going to put an account on your balance sheet. And if it is not truly a corporate credit card, you're going to have to clear that balance every single year and then open it back up at the beginning of every year. I don't know if we're planning to touch base on how we do that, Jennifer. When we do that, I think that's a bit more of an advanced feature. But my number one recommendation, get to one corporate credit card and one corporate bank account. Keep your bookkeeping as clean as possible.
Yeah, definitely. I don't know that we'll have time to touch on that. You know, especially like if you get to that, or even I know a lot of our clients say, I don't want to have a corporate credit card, I'm going to use a personal card, but they dedicate one personal card for their corporate expenses, 1 to 2 corporate card. You know, some people have Amex for the rewards, that type of thing. So keep it as limited as you can. But if you dedicate one to just business expenses, it's going to make your life a lot easier, and it's going to reduce your accounting fees, honestly.
Yeah.
So, okay, so we dealt with that transaction. We set up a rule. So I'm going to go in here and I'm going to deal with a contract revenue one quick because I definitely want to get to this because this is a question I've been seeing a lot lately. So right here, this is my revenue that came in, and so it's very quick to say, okay, this was from Zip Consulting. It's contract revenue, HST on, add. I could even create a rule so I never have to deal with this again. Where I get a lot of questions is, why wouldn't I come over here and use the invoice feature in QuickBooks versus using just adding it directly from the bank feed. And so the invoice feature is good if you're going to be doing a lot of, you need to track your AR or potentially you have invoices that aren't getting paid for till like 6 months out later, right? The majority of our clients though, they're getting contract revenue and they're putting their time into some system and then they get their deposit, and it's just easier to do it right here. Once you start using the invoices in QuickBooks, go ahead, Andrew.
The one thing I will mention about that is I think you're absolutely right. Huge time benefit to be able to do it, process it automatically from here. The one caveat to that is typically for consultants, you're going to have 1, maybe 2 invoices at the end of the year that should be accounts receivable. And you do need to make sure you put those into the system, which would be having to do it from the invoice tab. So what an accounts receivable is, for those of you who aren't familiar, is because in Canada, we're obligated to use the accrual basis for tax compliance. That means we have to count revenue that was earned during the fiscal year, regardless of whether we received it. So the cash basis means you only account for revenue and expenses based on when you spend the money or receive the money. On an accrual basis, it's based on when you earn the money. So for example, if I did an invoice, if my year end was December 31st, and I did an invoice from December 16th to December 31st, and I didn't receive payment for that until January 3rd or January 5th, that would still be considered revenue in the current year, but obviously I haven't collected that money yet. So it goes into a balance sheet account called the accounts receivable. And that is really important from CRA's perspective to recognize the revenue that was earned during the fiscal year, regardless of whether you've collected it or not.
Yeah, that can definitely help speed things up at your end if you already have that in your file, and we're not having to come back and ask you, was the deposits in January actually for money that you earned in December?
Yeah, and that means really only doing this with 1 or 2 invoices. So the last 2 invoices of the year, you would create them in the invoices tab, and then you would go in when you receive the money, instead of using a bank rule or a thing, you would actually match them to the individual transaction.
Yeah, and I'll just go through real quick and create the invoice like for this one. So let's say this one right here. So this is going to be deposit on 8/29. I'm just going to go do an invoice real fast. So do an invoice, you just would come to the sales tab, invoices. You could also just do new over here. This is this button right here is where you can create all kinds of transactions. So you come to new invoice. You would set up your customer, the invoice date. And I'm going to do this one. Say this was money I earned back in April, because I want to show you, because I see this get tripped up a lot sometimes. So this is back in April. I'm going to say the amount was this with HST on. So you can come in here, hours worked, March 2019, put as much detail in there as you want. And I'm going to save and close it. So I'm going to go to my banking.
After this, we may want to go back and show them how to make that recurring as well.
Yeah, so we'll definitely do that. So right there, so you'll see right here, I created that invoice and this deposit in August. It's not matching right here. And so what you do is you go to right here, because this is money that you made in April, it's going to come in August. What you do is go to find match, still not matching. So you go and you change the date range back a ways, and then it's going to find it. And then you just click match. And then what it's going to do is apply what's called a received payment to that invoice, saying, yes, this invoice is paid. So it goes against your cut, it zeroes out accounts receivable, and the money goes into your bank account. That one. And what Andrew was talking about with reoccurring invoices is right here. Let's just click on it. So what you can do is, say you have a template for your contract revenue that's the description is already filled out. You want to save that, and I don't know why it changed it to a crazy rate on this one. Okay, and then you're going to go right here, make reoccurring, and you can set it just as a reminder or an unscheduled. Hours worked on X project. Save template. when you come over here to reoccurring transactions, you can just use this, and it's already going to have your customer information filled out, product, service, your description, and then you would just change the data right here. And then it just created a new invoice. So now it's going to show up over here under sales. The one caveat I will say that happens is if you're using, you're doing your deposits directly from the bank feed, you're just entering them like this. Maybe you set up a rule to deal with them, add. They don't show up here in the sales tabs. So I've gotten a number of questions from clients. They're like, I have all this sales, but it's not showing up over here in sales. It's just not showing up in this, like we could say the sales module in QuickBooks, but it's still showing up on your reports over here. So all your sales are still showing up right here. And you'll see the transaction type. So this, in this case, there's just a deposit on these ones we created invoices for that amount. Okay, so I know Andrew said he wanted me to touch on a, let's go to the credit card, on a setting up a rule for a split transaction. Let's see. Let's just do one for this one, create rule. Okay, so I'm gonna create another rule for this because maybe you go out to pizza a lot, and so you want to do a rule to deal with all your pizza transactions.
More common under automobile or home office. So this is just an example. We probably don't normally split out the meals and entertainments because when it comes to meals and entertainment, we do want you to report it at 100% to us, and then we'll take care of the 50-50 adjustment at the end of the year.
Okay. I don't think I have example right here in automotive or home office.
Yeah, I didn't see one either.
Yeah, so we'll just pretend that this is like you're doing an automotive or home office.
Yeah.
But what you could do is split it between two categories by percentage. So I'm going to do a business promotion and just do it 50-50. And the other side of it is going to be director's advances because we're going to say the other side of it was personal. And so whenever it's a personal expense, it goes to director's advances if it's like the personal portion of it. And this time I'm going to do auto categorize and manually review. Save. And so when I do that, it's going to show up that there's a rule, and that's just and it just says it's a rule split. If it isn't split, it will show you actually what the rule is. And then it's saying, okay, this is a rule, and I'm going to add it to the book. So it's going to add 50% of that to director's advances and 50% to business promotion. And so what's great is sometimes if you do it general, like I just use the word pizza, it's going to pick up any of the transactions that have pizza in it. So I don't have to create separate rules for every single pizza joint in Canada, basically, right? Like all of my pizza transactions are dealt with. I do that usually with taxi too. Like anything that says taxi, I'm going to categorize it to travel. So that's when you make those more general rules, it just saves a lot of time making rules and then categorizing everything.
And when you do general rules, I love general rules, but don't make them automatically process.
Yes, yeah, exactly. So that's where on this one, I didn't do it automatically process. One that I see a lot that gets, what is it? I think there's like a coffee shop. I can't remember what it is off the top of my head. It has like SO in it. And so if you do like, okay, process everything that has SO in it. It's Aroma Espresso because it has the word SO in it. So when you do an automotive rule to like all of SO go to automotive fuel, it grabs the Aroma Espresso ones as well.
Yeah, you gotta be careful on those ones.
So yeah, those are like the rules. We've covered all of that, expenses a little bit. The next thing I wanted to cover is transfers. And I think in our last webinar, we kind of went back and forth on this, Andrew. And so we came up with a process that we could kind of advise clients to consistently use, and that's using a transfer clearing account. So transfers can be a little tricky between accounts in QuickBooks. And so the easiest way to deal, like this is a transfer, is we have this transfer clearing account. Let's use this transfer clearing account right here. And so any transfers between accounts just would go to that. And again, You could set up rules. The other thing you can do is sort by bank detail. So you, for some reason, don't want to have a rule set up for all this. I'm going to say all these are transfers to the transfer. You could do transfer clearing account. If they're straight directors advances, we would maybe want to do, let me see this. These are no. Yeah, so these are all transfers. I'm going to do transfer clearing account, and then I'll show you directors advances.
What Jennifer means by whether they're director's advance or not. So transfers between corporate accounts or like paying off the corporate credit card would often show up as a transfer. So those are transfers, and that's where you use the transfer clearing account. If you're transferring to a personal bank account, then that is going to be a director's advance. That's like a withdrawal.
So, and I'll show you. So like all these payments I just received from the credit card were transfers clearing. The checking account. So these right here, these were payments. In this case, I happen to know because either I know the client really well, or because you're doing your own books, you know, okay, this $10,000 went over to my personal account. So it's a regular director's advance. I'm going to add it. So then if we go over here, let's just look at this right here. So director's advances shows up on the balance sheet. It's not an expense account. It's a current asset account on your corporation's balance sheet for right now. At the end of the year, you'll do your director's fees, and your director's fees will get transferred to the expense portion of on the profit and loss.
Yeah. And that's all done tax planning with your account manager. So if you're not familiar with the tax planning process, typically happens around November or December or at your fiscal year end, whichever comes first. So I'm assuming for most of you, the next one is going to be at your fiscal year end. Your account manager looks at things like your director's advances, looks at your personal financial position to determine a tax strategy specifically for you, figuring out whether we're going to pay you salaries, we're going to pay you dividends, we're going to pay your family members, what kind of income splitting we're going to do. So lots of options that go into tax planning. One of the key drivers for that is how much money you've physically withdrawn from your corporation, and that's all tracked through the director's advance.
So, and that's all going to be found on the balance sheet report right here is your director's advance account. Here's your bank balance. This is where you'd find your accounts receivable balance. And I just touch on this because some clients, where's my director's advance account? It's on the balance sheet. Your expenses and revenue are on your profit and loss. This is where you can also find your GST, the amount that you owe for GST, and the payments that you've made towards that. So you want to look at this total amount down here, right here, and your credit card balance. Briefly, because I know we got to wrap this up really quickly, I just really want to cover how to enter expenses from your personal accounts. Like maybe you have a handful of expenses that you want to enter, they're not connected to the bank feed because you don't want to clutter your bank feed. So the best way to do that is to go to new, expense. And again, this would be if you're not using Receipt Bank, but and the payment account. So this is why, going back to the very beginning, this is why we have director's advances set up as a bank account. Because I'm going to say the payment account was director's advances because this was money that I spent for the corporation. And so we're going to change the payment account here. Say I bought some gas, gas for work. I'm going to put it in. Amount $10. I'm quick method. So the sales tax is out of scope. And I'm going to save it at close. And so that $10 just now went against your director's advances as money that you contributed.
Yeah. So that reduces the director's advance. The director's advance, like Jennifer said, is like a bank balance. It goes up and then down with every single transaction. So when you take money out of your business, the director's advance goes up. When you pay for something with money that's your own money, not the business's money, that brings the director's advance balance down.
Mm-hmm. Yeah, and so
yeah, I guess a couple other things I'd just like to touch on. Thank you very much, Jennifer. The reality is we can't go through every possible feature of QBO. This is meant to be an introduction. It's going to get you 80% of the way there. We're doing regular ongoing webinars. There's a ton of free resources that we have on our website. There's a ton of free resources that we have in Drip Marketing. There's a ton of free resources on QuickBooks website themselves. I guess the only things that I think might be worth touching on before we wrap up, Jennifer, is just looking at the expenses and being able to see which ones have not been matched to a payment, like i.e. paid through the bank or marked as paid by director's advance. I don't know if you have you probably don't have an example of that here, but that's most likely when we've got something like coming through from a receipt bank.
Yeah, so let's just do one, like pretend this one came through receipt bank, right? I'm gonna do one really, I can do this really quick. So credit card came through the RBC credit card, payment date right here, business promotion, pizza. So you're saying like, where would I find that? How would I know that because it didn't get reconciled? So I go over here to my credit card, there's like never $10.50 spent on that day, right? So how would I know? One of the main things that you need to do is come here to the gear menu, reconcile your credit card account, and you would see so you would put in the end date of your ending balance. Say it was $100 on August 29th, 2019. So what's going to happen is it's going to automatically check off all of the transactions. It has this little green box. It came through the bank feed, or it was matched to something in the bank feed. In this case, this $10.50 did not come through here. So maybe I accidentally entered it as coming from the RBC credit card, but it was really came from my personal funds from director's advances. So I just want to change it right here because it didn't actually come through the corporate credit card. And I'll show you another, I mean, this is the primary way that you should be checking your accounts really. So the reconciliation screen. Just see here. And ideally, when you got to the end of this, when you got to the zero would be balanced, you'd finish, and you'd reconcile the account every month. And this is just a further step to just ensure that your books are accurate. When we get to year end, we do require that your corporate bank and credit card accounts are reconciled to your bank statement. And so if you're going through and doing this on a monthly basis, the majority of the time, it's going to pick up and check, and it's going to be zero, and it's going to literally take you 3 minutes.
Yeah,
and you're going to.
My number one tip on this: once you've done the bank reconciliation, lock the account for that period, because otherwise you might get a transaction that, because sometimes with things like receipt bank, a date will get reversed, or maybe you put in a receipt that you've already categorized on the bank manually, and you put it in, late by accident. So once you do that, lock the period in your QBO. And maybe Jennifer, you can just show us quickly how to lock a period. Doesn't mean you can never go back in. It just means to get in, you have to unlock it. So you're consciously knowing I'm going back and making an adjustment to a period that I've already reconciled.
Yeah, and receipt bank is great because it will actually block you from publishing then. If you have the lock date in there and you try to publish a receipt, because maybe you're going through your receipts really fast, you have a receipt that you published prior, it won't publish. It'll say that the books are locked. You can't do that. So I'm going to say, okay, I reconciled through this date, save. QuickBooks will give a warning, receipt bank will block you before you enter a transaction prior to that date.
And I can tell you one common problem that we have is someone will give me a QuickBooks file, we'll pull out reports, and then you'll make changes to that file, and that'll just create a nightmare to locate.
It's a chain.
Yeah.
Yeah.
It's just, do not do that. Please do not do that.
Yeah, so year end, like after we pull the reports and we lock down that date, definitely.
The other thing that might be worth touching base on, I don't think we can even really demo it, but I think it's worth a mention, is the new mileage tracker that they brought in from QB Self-Employed. It's really more of an app meant for your phone. You can come in here and see the mileages that have been recorded. I don't think we have any sample data because we don't have an app connected to this sample account. But the beauty of the mileage tracker is you can turn this on. I'm not going to say it's the best mileage tracker in the world, but it is certainly better than what most independent contractors are doing, which is very little. If anything, you're going back and then just calculating how far is it from my client to my home, and then what's that mileage. So I strongly encourage you to load up the mobile app on your phone and start using the mileage tracker to automatically capture this information so that you don't have to track it. Because the other thing that is really important to note is that the number one thing being audited right now is automobile expenses. CRA has realized that very few of you are keeping the required auto log for your mileage. And as a result, people are losing out on legitimate deductions that they're eligible for just because they haven't done the due diligence, because it's onerous to do it the old-fashioned way. But now you have the technology in place to make it simple and easy. So please take advantage of that and make sure that you're doing that on a regular basis. And on that note, I know that's hard to demo here. Maybe we can just open it up for some Q&A. If anyone has any questions, please feel free to either post it in the Q&A or in the chat. I know there was a question earlier by Elena about the bank reconciliations, whether they could be done not in chronological order or not. I basically already answered and said no. They are sequential. They're based on the balance of the previous bank account. So you do the first month, then you do the second month, third month, fourth month, etc. So what will happen is after you've done the first month, it'll automatically have the balance for the next month based on that. So I don't know, any other things that you think? Doesn't look like there's too many questions from the audience today, which means you must have done an amazing job, Jennifer. Anything else that you want to touch on before we wrap up?
Yeah, I would just say, like, as far as that reconciliation too, normally when this is connected to a live bank feed, your bank balance is pulled in right here. Mm-hmm. And so it will show your bank balance and in QuickBooks. And if everything's entered from your bank feed right here, and in QuickBooks, this balance should be like
close.
At least close, right? Yeah. And if it's really far off, you need to go back and definitely start doing your reconciliations and figure out where it's off at.
Yeah, and people often ask me why it would be different when it is different. Because there could be things, for example, you might have a check written. We didn't touch on checks because a lot of our clients don't use them. But in traditional businesses, you might be using the check writing tool, and you might have effectively a payable in the system that in QuickBooks it's in there, but it hasn't actually cleared the bank as of yet. So there are reasons that there would be a discrepancy, but that discrepancy should be relatively small.
Yes, exactly. Another question I get a lot of times, since no one's really asking questions, is why would we not use the receipt feature right here in QuickBooks versus Receipt Bank?
Because Receipt Bank is way better.
Yeah.
Bottom line.
Yeah, so there's a lot of, I've been hearing a lot of reports of like a lot of glitches with the receipts right here in QuickBooks of people who have been testing it out.
Yeah, it may get up to the point to be as good as Receipt Bank, but we're nowhere near that. It is a basic feature at this point that is working towards being as good as Receipt Bank, but it's not. Trust me, we pay a lot of money to be able to provide you guys with Receipt Bank, and there's a reason that we do that. If we could do it for free using QBO, we would be, but we don't think the QBO product is there just yet. Now, I do see we do have another question from Elena about meals and whether we should set up a special 50% HST account. No, you don't have to worry about that. For meals and entertainment, record it at 100%. If you are on the long method, you will be breaking out GST. If you're on the quick method, again, you don't break out the GSTHST on meals and entertainment. So report it at 100%. We'll worry about backing out the GSTHST if necessary on the 50% that's not deductible, and making the appropriate adjustment in the financials. I apologize. I have children here who cannot seem to behave.
I can't believe all mine have been quiet today. It's kind of rare.
I am very impressed, I must say.
Yeah, I don't know whether I should be worried or not. So yeah, I don't think I have anything else to cover. If no one has any questions within the next couple of minutes, I think we'll call it a wrap for today. And
yeah. Careful, see what happens at the minute.
I know.
They were quiet the whole time.
No.
Okay, excellent. Thank you, ML Gramble. Glad you found the session helpful. And again, we will be having these seminars regularly. It's a great opportunity for you guys to come in and ask questions. We are actually doing an impromptu session tomorrow. There'll probably be an email going out today if it hasn't gone out already from customer service. We're going to be doing a webinar just on working remotely. Obviously, with COVID-19 and all the issues that people are having, we want to take our expertise in being able to be digital and help teach people from the experiences that we've had on what have worked, what hasn't worked. That may be applicable to you. It might be helpful for friends that you know. We're going to be talking about tools like Zoom and GoToWebinar and Citrix and all the tools that we use to enable our team to be able to work 100% remotely through these difficult times. If you think that would be helpful for you, or you know anyone that would benefit from that, please feel free to share it. Our goal is just to provide some help and some guidance to those people who are having to struggle through that as of, because for us, Jennifer, I'm not sure if you know, in Ontario tonight at midnight, all non-essential services will be shut down and everyone needs to be working from home.
Yeah.
And on that note, thank you again, Jennifer, for dialing in. I wish you and your family the best. And thank you to our guests for joining in.
Yeah, thank you, everybody. Again, if you have any questions, just feel free to reach out to us as well.
Okay.
All right.
Bye for now.
Bye.